the collective intelligence of the crowd sinks to the level of the least educated participant. That's why we see some scary moves sometimes. Like, who are the people that were buying GameStop up at $300-500 a share? Just didn't seem very educated to me. Some of them made money with it, and that's great, but at least have an exit plan. So my thought process is, what's reasonable? Where can I reasonably expect this stock to do? What can trip me up here? Is it that there's an earnings report due? Is it that the Fed is going to make a speech in Jackson Hole, or that the CPI number is due out? Those are things that could trip me up. And I might still like the stock, but I'll just reduce my my share size. Instead of risking one risk unit and putting a full position on, with buying it at 26 and risking $1 per share. Let's say my normal risk unit is $1,000. Maybe I'll say I'm only buying 500 shares because we have market conditions that aren't quite as favorable. The stock could go, but the odds are greater that something bad could go wrong. So I'm going to change my position size. And if it does go, I can't beat myself up for not taking a full-size trade. It's about being comfortable with your process as well. And it takes time to develop. It takes a lot of skill. It takes a lot of practice and learning and personalization. And so the beginners should just start small until they learn their process and what their time frame is, what their risk tolerances are. Maybe you're the type of guy who just does the YOLO GME trade, and that's it. I do one trade a month, everything into it. And sometimes I get lucky and win big, and I keep playing. It's not for me, certainly, but I'm not here to tell anyone what to do if it works for them.